I have been trading Forex for nearly 7 years, and during that time, I have experimented with countless Forex trading strategies. However, many of them are either overly complicated or simply don't deliver consistent results. So what I'm about to show you is a proven Forex trading strategy that is rooted in simple and time-tested principles that even institutional traders have been using it for years. It's easy, repeatable, and it actually works. So before we dive into the charts and all the explanations, it's very important for you to understand how this trading strategy works. The strategy itself is very simple, but it has a few key steps that I just want to walk you through so you can easily follow along and even copy and paste it into your own trading. And as you can see, currently I have Euro USD on my charts. This is the trade that I sent to my VP members yesterday, following the exact same trading strategy I'm about to show you. And as you can see, the trade is doing pretty well, nearly reaching take profit 2. So the foundation of this strategy starts with multi-time frame analysis, which is key to understanding the market's overall direction. And I always begin with the monthly chart because it gives me the most reliable long-term picture of the market trend. And many retail traders often, overlook the monthly chart. However, institutional traders rely on it to, track major trends that can last for months or even years. And this big picture view is crucial when it comes to, making money trading Forex in a consistent and profitable manner. So on the monthly chart, I'm not looking for anything too detailed, just the overall Forex market trend and major support and resistance zones. Is the market forming higher highs and higher lows in an uptrend or lower highs and lower lows in a downtrend? And by understanding this gives me a clear sense of the market direction. And as I said, I also mark out these key price levels where the price could potentially reverse, but I'm not getting too specific at this stage. So once I have that big picture view, I move down to the weekly chart. And here I'm just confirming if the trend I saw on the monthly chart is still intact. And I also pay very close attention to how the price is reacting around these key levels that I have marked. And if I see any rejections at the resistance or bounces off the support, it often tells me that the Forex market trend is still holding on, but I also keep an eye out for any early signs of a trend reversal, things like lower highs forming in an uptrend that could actually signal that the market is weakening. Next, I move to the daily chart to get a bit more specific, and here's where I focus on pullbacks and corrections within the larger trend. So for example, if the monthly and weekly charts show a clear uptrend, but I notice a temporary pullback on the daily, I simply don't panic, and this is actually a key part of my proven trading strategy. Usually, the larger time frames tell me that the Forex market is still in a strong uptrend overall, and trust me, these pullbacks are absolutely normal. They happen as, Forex traders, they take their profits or, they react to short-term effects. And knowing how to react to pullbacks can make a huge difference in how much money can you make trading Forex. So rather than seeing pullbacks as a reason to, bail out, I actually view them as a high probability buying or selling opportunities. And let me tell you that the Forex market rarely moves in a straight line, so these dips within a broader trend often give me the chance to enter at a better price level and then, ride the trend as it continues. And finally, I drop down to the 4-hour chart to kind of fine-tune my trade entry and exit points. So this is where I pay close attention to candlestick patterns, things like dojis, engulfing candles, or hammer patterns, just to confirm whether the price is about to reverse or continue. So what I'm trying to say is that by looking at the Forex market through these different time frames, I ensure that I am trading Forex in the direction of the larger trend while using the shorter time frames to spot the best entry points. So the next part of my trading strategy is using moving averages just to confirm the Forex market trend once again. And moving averages, they are absolutely great for, smoothing out the price action and helping me to see the overall market direction more clearly. I personally like to rely on a combination of the 50 period and 200 period moving averages for the higher time frames, and then I add the 20 period moving average on the 4-hour 4-hour chart for more precise trade entries. Now, the 200 period moving average is often called the institutional moving average because big players like banks and hedge funds, they use it to track long-term Forex market trends. So when the price is trading above the 200 period moving average on the monthly, weekly, or even a daily chart, it tells me that the Forex market is in a strong bullish trend, and I will focus on looking for buying opportunities only. If the price is trading below, that signals a clear bearish trend, and I look for short trades instead. Now, on the 4-hour chart, I use both the 50 period and 20 period moving averages. So the 50 period moving average gives me a good idea of the short-term momentum. Let's say if the price pulls back to the 50 period moving average and holds, it's usually a good sign that the trend is still strong and I should start preparing for an entry. So along with the moving averages, I also use pivot points to identify key levels where the price is likely to react. Now, pivot points are a proven way to spot potential turning points in the Forex market because they are based on the previous price action, giving you a very good sense of where the market might reverse or retrace. So 9 out of 10 times I use monthly and weekly pivot points as they simply offer a broader perspective, which can be especially useful when looking for the areas where big players like institutions might be placing their orders. And when the price approaches a pivot point, I don't just jump in. Instead, what I do is I wait for the price action to confirm what the market is actually doing. So I'm looking for signs like a retracement or a rejection or even a strong break of the pivot point. So the last tool I use in my Forex trading strategy to kind of refine my trade entries and confirm potential reversals or trend continuations is Fibonacci retracement levels. So I use these to identify high probability pullback zones, and the key levels I focus on are the 0.618, 0.5, and 0.786 retracement levels. And these are the areas where the price is likely to, pull back before continuing in the direction of the trend, or where a potential reversal could happen if the level fails to hold. Now that you understand the approach, let's take a look at this recent trade setup on AUD/JPY, and I took this trade on the 21st of October. So starting from the monthly time frame, we can see that AUD/JPY is in a clear uptrend. The price has been making higher highs and higher lows, which tells us that the long-term direction is still bullish. We also had a bounce of the monthly pivot point at 9787, and that's a key support for the higher time frame. Now this is the weekly time frame, and we can see that the price has pulled back slightly just looking at these two candlesticks, yet it's still holding above the 0.5 Fibonacci level over here. And this is a very important zone as well because we are also sitting above the weekly pivot point, and we have the 50 period moving average just below as well. So this shows strong confluence. The pivot point, Fibonacci, and moving averages are all aligning, indicating that the uptrend could continue after this brief pullback. So this weekly chart gives me that confidence that we are still within a bullish market structure. Next, on the daily time frame, we can see a classical push and exhaustion cycle completion with the price closing above the weekly pivot point and retracing from this daily uptrend. And we can also see that the price has established a strong support level backed up by the Fibonacci level at 0.786, which is this line, because we are seeing multiple rejections, but we are still in that bullish trend. And finally, we are looking at the 4-hour chart. So this is where I fine-tune my trade entry, and the key entry signal here was this bullish engulfing candle that closed above the key moving averages. So the 20 period and the 15 period moving averages are holding the price up, and this bullish engulfing candle adds that confirmation that the buyers are still at control at this level. So once I got my trade entry, for my stop loss, I'm using the ATR indicator to help me place it correctly, because the ATR measures volatility based on the currency pair that you are trading, and I usually multiply it by 2. So it keeps me from setting my stop loss too tight and getting stopped out by minor price swings. So in this case, my stop loss was 68 pips, and I'm aiming for 160 pips as a take profit, which leads to a risk-reward ratio of 2.35. So with the bullish engulfing pattern and confluence from the moving averages, pivot points, and the Fibonacci levels, I was confident that this is a high probability Forex trading setup. And as always, now for the fun part, let's actually turn off this bar replay tool and see how the trade is doing. And as you can see, the trade has been performing very, very well. It hit take profit 1, take profit 2, and it's currently, I believe, in a profit of 123 pips by simply following the strategy I have explained to you. And this is the strategy that will give you consistent returns if you will apply it correctly, following the exact steps I just showed you. And trust me, if you put in the work in, the results will follow. So I hope you found this video helpful and interesting to watch, but if you're looking for more guidance or you simply want to take a step further, I offer Forex signals that mirrors the exact same trading strategy I have shared today. And trust me when I say that me and my team member has been smashing the markets all the way. And I believe it's a great chance to trade alongside us and learn from real market setups. You'll find the link in my description box down below. Don't forget to like and subscribe for more content like this. Thank you for watching and I will see you next time. Bye!